All right. So, I think the best way to kind of go about this is to figure it for each employee and then total it up, what their food tax liability is. So I think that's how I'm going to approach it here. So again, we've got all the parameters up there, what our tax rate is. We're going to assume that they get the full credit of 5.4%. So for the first one here, how much of employee A's wages would be subject to food tax? All 4,000, right. So we've got A, 4,000. And what's the tax rate? Yeah. We'll do the math there in a second. And what about employee B? All of it, right? Times. That's okay. I knew what you meant. All right. So then let's do the math here. So it's because it's 0.6%. So 0.6% converts to, if you're multiplying by decimals, yep. Okay. So $24 for the first employee. 39 is what you got. So, yep, 39. So we add both of those up, total tax liability, $63. Right. So that's how much they're going to pay. Oh, I guess you couldn't see my calculator. That's all right. Okay, next one. We've got one employee of $10,000. So how much of their wages? 7,000. So 42 bucks, right? Easy peasy. All right, now number 3, we've got 3 employees. So how much of employee A's salary is? Yeah. Oh, 2,500. What about employee B? Which is all 7,000. And employee C? Yep, 7,000. All right. You'll become familiar, probably already have, the fact the maximum, if you got the full credit, maximum you're going to pay per employee per year is $42. So these two are at 42. How much does the first employee? What's the liability? How much? 15? Okay. So we've got 99. All right. Total food liability there, 99. Excellent. All right. Now we've got 4 employees. They each earned $6,000. All right. We don't have to do these individually. What's that? Yes, we could. Absolutely. Because they did not, when you've got employees like this, where you've got one employee that exceeded it, but another employee that didn't, you're going to want to do it on an individual basis, right? But yes, so we can just do these times 4, so 6,000. How much of their, so times 4, 24,000. How much is that is going to be taxable? Okay, so that's the tax. How much of the 24,000 is taxable? Well, 7,000 per employee, but we've got 4 employees. So of this total, all of it, right? All of it's taxable times 0.006, and you got $144? Right on, 144 bucks. All right, now we've got 3 employees, and they each earn, and we can, because they all earn the same. Yeah.
So instead of doing that, what I just did 6,000 times 39 and I just times it by 4. Could that still do for?
So yeah, you could do that too. You could just take an individual employee, what their tax was, and then multiply that by 4. You're going to get the same result. Yep. So does everybody understand what her question was? Yeah. Okay. All right. So we've got 3 employees. Each of them earned $7,000. So times 3, 21,000 times 0.006. Somebody can do that math for me. 126. So in all of these cases, we haven't encountered any employer that has to pay. They'll be able to pay this at the end of the year, right? They didn't exceed that $500. All right, so let's look at number 6 here. We've got employee A with 3,000. And employee B with 8,000. How much of that is taxable? 7,000. Right. Yeah. In total, 10,000. Yep. Absolutely. So, what do we have? 42. And is this 18? Yep. So total food and tax of $60. All right. This next one we've got 4 seasonal workers, each earned $1,200. Sounds like maybe trying to trip you up a little bit. Are those seasonal workers subject to food tax? Yeah, they are. They're like temporary workers, right? Day laborers, no. But seasonal workers, because they're hired on a temporary basis, it's continuing. It's more than one day, obviously. So yeah. So we've got 4 of them, and they earned $1,200 each. So we could take the 1,200 times 4, which gets us 4,800 times 0.006. What'd you guys get? 28.8. $28.80. All right, next up, we've got some separate employees with different amounts. So employee A, $10,500. How much is taxable? $7,000. All right, employee B has $12,000 in wages. How much is taxable? $7,000. And employee C, $4,800. All of it, right? All right, so this is going to be 42. 42. How much is this one? 28.8? Oh, yeah, it's the same as what we had in the last. If I had any short-term memory whatsoever, I would have known that. So 8, 9, 10, 11, 112.80 for total food and tax liability. Probably don't have to write down this last one. 2 employees, both earned $7,000. Well, yeah, there they are. $84. Total food and tax. And then last, got several employees here. Ooh, where are we? Okie doke. So, employee A, how much is taxable? All of it. Employee B, yep, C, D, 7,000, and employee E, 7,000. All right. Now, you're right. Now that you've determined what the taxable wages are, you can add up all of those taxable wages and multiply it by 0.006 instead of on an individual basis, right? Now, what most software will do, though, is it will apply it to each individual employee. Yeah. But only up to 7,000 is taxable. So this is, yeah. So these are what I'm looking for here, taxable. Yep. Right. So let's do it that way so that we're not multiplying several times here. So we've got 1,200 plus 3. So I get 25,400. Is that right? Times 0.006. 152.40. Right. Okay. Not so bad. Okay. Any questions on those? All right. So, what do we have? 145. We got loads of time. All right. So let's move on to start talking about SUTA. Because you've got different, same concept applies. You've got a wage base, and then you've got a tax rate to get to the liability. But with SUTA taxes, that wage base is going to vary from state to state. So it depends on the state, what their rules are. And that tax rate is going to vary from state to state and employer to employer. Okay, so let's take a look here. So different states have different rules with regard to which wages are taxable. Oh, sorry. Put this over. There we go. With regard to what wages are taxable and what those rates are. This means that if you're working if you're working in a payroll department for a multi-state employer, you have to be aware of what the rules are for each of those states in order to apply the taxes properly. Let's look at this first example, and then we'll make up some examples as well. You're going to have to reference the table that's in your book, and I'll bring that up again in just a second, just to kind of remind you, because the problems that you have will tell you what state the employee is working in. Most times they're going to give you what the rate is, because they have to give you that information, otherwise you're really not going to know how to figure it out. So let's look at this one first. So we've got Sumatra Imports, and this is based on the entire payroll. Sumatra Imports, based in New Mexico, has a SUTA tax rate of 4.2%. It's a lot higher than the 0.006% or the 0.6% we've been working with. SUTA wage base is $30,100 for each employee's earnings. So that means that it's going to be applied on the first $30,100 of earnings for SUTA tax purposes for each employee. During the year, Sumatra had FUTA taxable wages of $109,500 and SUTA taxable wages of $298,700. First off, can anybody tell me why those two numbers are different? So for FUTA purposes, it was $109,500. For SUTA purposes, $298,700, the amount of wages that are taxed. So let me just remind you here. Base is our tax base times tax rate equals tax liability. They're saying here that for FUTA purposes, their base is $109,500. And for SUTA, their base is $298,700. What's that? That's a weird number to be a base.
Yeah, it's because it's not like, I don't know, it's not like.
Right. It's not even, but it kind of makes sense. So what they're telling us, remember, what is the maximum amount of wages that are going to be subject to FUTA per employee per year? 7,000, right. So 7,000, here's our max taxable wages, I should say. For FUTA is 7,000. What have they told us are the maximum taxable wages for SUTA? In this case, it's in the problem. Yeah. Yeah, 30,100. All right. So our base is higher overall than our total tax base for FUTA purposes is higher than our total tax base for SUTA purposes because per employee, our base is higher, right? So, I mean, this is what, 4.5 times higher that base is. So it makes sense that our total tax base, and this is going to be based on, so what this means is that for these employees, for all of their employees, 109,500 of those wages that were paid are taxable for FUTA purposes. 298,700 of those wages are taxable for SUTA purposes. Okay, that's because there's a difference in this maximum amount that's going to be taxed. Okay, now something else is different between these two. What's our tax rate for FUTA with the maximum credit? 0.6%, right. All right. What's our tax rate for SUTA that they gave us? 4.2%. So not only do we have more wages subject to tax for SUTA, we also have a higher tax rate for SUTA. Okay? So they've done the math for us here, so I'm not going to do that over. But for FUTA, their tax liability is $657. Oops. Which means they exceeded that 500. Now, they may have exceeded that 500 in the fourth quarter, in which case they still don't have to pay it until January. But if they happen, maybe they paid a bunch of bonuses in January, and then the rest of the year it was, well, I guess that wouldn't, or they had more employees in January than they had in December, in which case they may have exceeded it earlier in the year. We don't know. Based on this information, we don't know. We'd have to see what the wages were and the number of employees were for each quarter in order to determine when they reached that 500. With the information they gave us, we don't know yet. But for SUTA purposes, that's a whopping bit of change. $12,545.40. Makes sense though, right? The benefits, the unemployment benefits are paid from this fund, not this fund. This is just the administrators that we're paying up here. This is where the benefits are going to come from. No, go ahead. Go ahead. I'll take my water bottle out of the way. Are there questions about this problem? We'll do some other problems here. And we'll base it on total amounts, not per employee. All right, let's play around with it a little bit. So I don't think I have. Okay. Let's take a look at individual states and we'll play around here. So in your book, this is the table, and it's just terrible to look at when all you have is the ebook. It's not very, you know what, hold on a second. I want to see if it's any better if I use, let's see, a different, and I wish this paper book was cheaper. I'm sorry it's not. Because I'd love it if everybody could have a copy of the paper book. I think it's easier to work with. No, that's not what I want. Well, I mean this. Oy. Any way to just make this pop out? All right. Well, we'll make do. So this is the same one that I was showing you here. There are two different ways you can read your book. There's like this. There's just the ebook, which essentially is just kind of like reading it on a Kindle sort of thing. And then there's this other ebook under this Mind Tap program that gives you more options. Like it'll read out loud to you, by the way, if you are interested in that. Some people find that helpful as they're reading along. And some people don't. Okay. So let's take a look at these. Let's say we've got that's going to be different. That's going to be different. This is going to stay the same. So let's say that we have, we're in California. And for food and tax purposes, we had $325,000 of wages. And for SUTA tax purposes, now let's take a look at California before I say anything, because let's see what California's base is. Oh, I don't like this table. It's not giving me everything I need. Going back here. Okay, so we would find California. So California does not appear to have a maximum. Their taxes are on all income. And yet they have trouble paying the amounts due. So let's just say that for SUTA tax purposes, our wages were a nice round $1 million. And our tax rate was, so you can see for California, it's between 1.5% and 6.2%. So let's say it's 5.2%. So how much is the tax liability, the FUTA tax liability, and this is unlimited. How much is the FUTA tax liability for this company? How would you figure that out? How much tax do they owe? $19.50. How much SUTA tax do they owe? $52,000. Because that's not capped. No cap. Let's look at a different state here. Let's look at Georgia, because then all I have to do is this. Let's do the same numbers here. So our FUTA tax isn't going to change, but our tax rate's going to change. And we'll change that too. So for Georgia, it's between 0.06% so that's pretty close to zero, but to 8.1% on the first 9,500. So that means these two numbers are probably going to be closer to each other. Let's say this is 425,000. And our rate has to be between these amounts here. So let's say it's 5.1%. Now our SUTA tax is, yes, $21,675. Okay, so you know in general the difference here. Now we're going to do one of those quarterly exercises as well, because we've got to figure it out, so this may get messy. Heads up. We've got to figure out how much is owed for SUTA tax purposes and how much is owed for FUTA tax purposes for each of these. So for this example, let's say we're in Iowa. Iowa's a nice state. All right, so we've got, I have to think here. Iowa's, it's the first 36,100, okay? So, I'm just gonna put that up here. So SUTA, all right. Let's just have 2 employees. That makes life a little bit easier. All right, so we've got employee A and employee B. And we've got 4 quarters that they were paid. Total wages, this is our first quarter, for employee A was $10,000. And total wages for employee B was $6,500. All right, so for FUTA taxable, let's do FUTA first. FUTA taxable, how much of employee A's wages were taxable? Yeah, $7,000. What about employee B? All of it, right. $6,500. So FUTA tax for each of these would be $42 here and $6,500. How much? $39. Okay, so our total taxes for $81 for FUTA taxes, right? This is just FUTA. All right, let's do a little double line here. Now let's look at SUTA. So we've already got our total wages. SUTA taxable. How much of the $10,000 is taxable in the first quarter for SUTA purposes in Iowa? All of it, right. $6,500, all of it as well. Sorry. SUTA tax. Let's say we have a tax rate of, what are our range here? 0 to 7%. Well, let's say it's 4.5%. So how much, so what is the tax on that $10,000? $450. Right? And what is the tax on that $65? $292.5. All right, so 0.50 to 5, 4, 742.50. Yeah. So I just made up that tax rate, but for Iowa, we're saying that this company is in Iowa. the range of possible tax rates or SUTA rates is 0 to 7%. Yes, but for everybody, whatever that tax rate is, the base remains at $36,100. Okay, so there's our first quarter. Let's look at the second quarter. Here, this. I wonder if this works. Kind of a dividing line here. So let's say for the second quarter, they had total wages of $30,000, and employee B had total wages of $15,000. All right. So now again, this is FUTA right now. How much of that $30,000 is taxable for FUTA purposes? Same employee. Second, yep, right, 0, because they already met the 7,000 wage base in the first quarter. What about employee B? 500, right. We look at how much is remaining, right? If they had made $300, then they're still going to be at, so they wouldn't have exceeded the 7,000, so it would be $300 that's taxable. So we've got $500 of FUTA taxable wages, nothing for this employee. So FUTA tax here, it's pretty easy, 0, right? Because anything times 0 is going to be 0. What's our FUTA tax here? $3. All right. That's all we have to pay. Now let's look at SUTA. I know I'm running out of room. All right. So for employee A, how would we figure out what their SUTA taxable wages are? So now their total wages are $40,000, right? They made $10,000 in the first quarter, $30,000 in the second quarter. They're at $40,000. The max is $36,100. So we know that they exceeded the max during this quarter, but how much of those $30,000 is taxable? Yeah.
How do I explain? You can't subtract the years with the max.
So we can, what you would want to do actually is to determine, look back here to see what their year-to-date wages were. How much more do they have to earn to get to that max? So you can do that by taking the max, which is $36,100, minus the year-to-date prior to this, right? Year-to-date wages, which was $10,000. So they have $26,100 additional wages to earn until they reach that base, right? So at this point, they need to earn another at the first quarter, they need to earn another $26,100 in order to reach that base. Well, in this quarter, they earned $30,000, so they exceeded it. How much of that $30,000 is subject to SUTA tax? $26,100, right? $26,100. All right. What about this guy here? Look, employee B hasn't reached it yet, right? They haven't reached the max yet. They had $6,500 in the first quarter. Now they've got $15,000. Total, they're at what? $21,500. So they haven't reached that $36,100 yet. All of it, exactly. So $15,000. is taxable. Our rate, 4.2%, right? So let's see our SUTA tax. Oh, 4.5, you're right. Thank you. I don't remember the numbers I made up. 4.5 is our SUTA tax. So we'll take 26,100 times the 4.5%, which is how much? Okay. And then we'll take the 15,000 times 4.5. Second quarter, 9, 4, 6, 7, 8. Now in the second quarter, we owe $1,849.50. And you do that for every quarter. So you have to keep a running tally of how much you have paid, what those taxable wages were in the last quarter, because in order to determine if you've reached the max this quarter, or how much of those wages this quarter are subject to the SUTA tax or the FUTA tax as well, right? So you can see here, again, this table, it's not perfect, but you can kind of see the difference and it's all over the place, isn't it? Like there are some states where their wage base is, so there's some 8,000s there, and this changes every year, by the way. 9,500. There used to be, anyway, some states where that it was the same as the federal. I'm not seeing that right now. Looks like all of them, yeah. I don't see any, but some of them are pretty high. 40,800. And look, so 40, where is it? 40, North Dakota, 40,800, and their tax rates go all the way up to almost 10%. That's pretty high. Oregon, up to 50,900. What else here? I saw another one that was high. There's 49,900, 56,700 for Hawaii. But you do get to live in Hawaii, so there's that. But you can see there's a big range. Now, also, remember I had said that, you know, for FUTA, only the employer pays, right? For SUTA, in most instances, only the employer pays, but not all instances. You can see on this, there is a column here that shows if there is any amount that the employee pays, that's what this column says. So the employee may have to have some withheld as well. So for example, Alaska the employee pays a flat 0.51% on the first $47,100 of income. That's going to be withheld from their paycheck. California, 0.9% is withheld on the first $153,164. This one, Hawaii is a little more complicated. 0.5% of maximum weekly wages of $13,1840, not to exceed $659 per week. And this is a disability insurance. So what that means is in Hawaii, you're not going to pay more than $659 per week, but you might pay less than that if your wages are lower than that. And this is for a type of disability insurance that the state then pays for. I think California's is also a disability insurance, although it doesn't say so there. Yeah, New Jersey has an employee portion. New York has an employee portion. Pennsylvania, look, it's 0.07% on total wages. There's no maximum, so it would just whatever you receive. Puerto Rico, Rhode Island, but most of them don't have an employee portion. Some of them do. Okay. Questions? Okay. So on Monday, what we'll do Let's see if I can get to. We're going to start talking about I can't believe I didn't save that. This concept of experience rating. This is a calculation to determine, this is what states use to determine the tax rate that they charge employers. This experience rating. And it's based on how much the employer has contributed over the years versus how much they have withdrawn through people making claims of unemployment. So that determines, remember I said the more you use, the more employees, the more turnover there is, and employees who are able to draw unemployment benefits, the higher that rate is going to be for employers. This is a calculation to determine it. Now, it's not an across-the-board calculation because each state kind of has their own. What you do is you do the calculation, and then you, to determine the reserve ratio, and then you apply the reserve ratio to a table. That table will vary state to state. But we'll do some problems around that because I know you've got homework problems on that. And then we'll also look at that form 940, how that's filled out. It's not as complicated as the 941. And again, it's only done once a year. And we'll take a look at the SUDA information reports that are that have to be filed for Iowa. Again, we'll use Iowa as the example. Those information reports are done on a quarterly basis. So even though the report to the federal government is due annually, the reports due to the state are due quarterly. Because, I mean, and you can see why, that's a lot of money. Yeah, you know, and the state needs to get that collected and everything. Okay, that's what we'll do next Monday. All right. Have a great weekend, I guess.